not just holding Bitcoin on balance sheet. What we have here is a new money that's coming along and it's better than everything else. It's hard to imagine the companies and how they ran 25 years ago compared to now. The internet's changed so many things. Transferring value is even more than transferring information. I've been particularly excited about Bitcoin the last maybe 4 years or so, partly because I felt I finally understood it. And that can make things very exciting. Every company should be, even only from a defensive point of view, should be looking at how they do business and how Bitcoin can affect them in so many different ways. Obviously, there's a store value. You can put some on your balance sheet. That should be pretty much a no-brainer for a lot of companies with a long-time horizon. I think we're at the stage now where if you're not seriously at least considering Bitcoin, it's questionable whether you properly fulfilling your fiduciary duty. The true value is all in Bitcoin.
Before we get started with all the topics, maybe quickly give the viewers an overview of who you are and why you're excited about Bitcoin.
Yeah, so Sam Roberts, I'm Director of Investment Consulting at Cartwright, a UK-based consultancy advisor for institutions. And I've been particularly excited about, maybe we can dip into some of the history, but I've been particularly excited about Bitcoin the last maybe 4 years or so, partly because I felt I finally understood it. And that can make things very exciting. And then you start to see how it can affect everything around you for the better.
Interesting. What does Cartwright do currently?
So we advise institutions, different types of institutions, particularly on their investment strategy for their assets. Right? So if they've got a pool of assets, so pension trusts, charities, corporate treasuries are the three key areas.
Really interesting.
In that area, I think there's a lot of even quite simple changes that don't include Bitcoin, and then you include Bitcoin and it supercharges it.
Yeah, like how did you like? It's from the traditional space. If you do anything that is with finance since long, and you haven't discovered Bitcoin, I think the jump to getting towards Bitcoin and discovering it is actually not that easy because you're in so deep in this traditional financial space. How was that for you?
You're right. There's quite a lot of stuff that you need to unlearn and then learn it properly, which is a real shame because it means it's slowing so many people down to really understanding Bitcoin. For me, I suppose I've always been someone that's been inquisitive, not feeling I have to go along with the herd for the sake of it. I mean, would you like me to get a little bit of history on my journey, and that might then put this into context? Okay, so my journey probably started back in 2008, and that was following the global financial crisis, and my sort of uncomfortableness at that point was that this doesn't make sense. This contradicts what I've learned in the past about how economics works, how finance works. Something isn't right. There's this uncomfortable feeling, urge to find the real underlying answer. So that took me on a little bit of a journey, which meant that I found Austrian economics and dove deep into that. And I think that naturally takes a lot of people, certainly used to, a lot of people to gold and sound money and the concept of sound money and all the benefits of sound money and so on. And so that was probably 2010, 2011. I'd have probably called myself a gold bug back in those days. And then 2013 came around and Bitcoin was, particularly I think the second half of that year was, price was shooting up dramatically and took my notice. And I'd heard about it a few times, but I thought, what is this? And I dabbled a little bit just to try and understand what it was. That's the way that my mind works. I'm not interested really in whether something works in theory. I'm more interested if something works in practice. And so dabbling is the way to do that. So that's 2013. I didn't understand it. I mean, it was interesting. I thought, maybe there's something there, but I didn't really understand it. and parked it for a few years, focused on my career, came back in 2021, really, and then deep dived again, and through a couple of key things, felt that I understood things a lot better. So one was the Bitcoin Standard. Great book, highly recommended, obviously, by lots of people, quite rightly too. But for me in particular, it was the key that opened the door, because it brought together the building blocks that I already had deep dived into, Austrian economics, gold, etc., and put them together in the context of Bitcoin. So it was really, for me personally, it was a really helpful book. The other thing that I did at the same sort of time was I said, what is all this? What are all these altcoins and NFTs and stuff like that? What is that all about? How does it work? It doesn't make sense to me. So I did the similar sort of thing. I sort of dabbled a little bit in that to see what does it actually mean in practice. And what that helped me to realize was that the value, the true value, is all in Bitcoin. There may be some technology things that come out of the rest of the space. Maybe good luck finding it, but the real value is in Bitcoin, and we can talk more about that. So that was an important part. That an important period for me. And so by the end of 2020 or 2021, I was firmly saying, okay, Bitcoin is where the focus should be. And then it came out to February 22, and this is where then it goes from being something personal to something business related. February 2022, Russia invaded Ukraine, and Russia had $300 billion worth. You'll be familiar with this already, I'm sure, but as with your listeners, $300 billion worth of other governments' bonds frozen. And that then, from an institutional point of view, that then reintroduces counterparty risk into government bonds. We're used to, in all our models and so on, talking about government bonds as being risk-free. Well, depends which risks you're concerned about, I suppose. But this was it was a big moment, I think. I'm not sure how many people actually realised it outside of the Bitcoin world, but it was a big moment, I thought. And therefore, the world is then moving to assets, which now is talked about quite regularly, but it wasn't really 3 years ago, how governments and companies and organizations need to move to assets which don't have that counterparty risk. So gold and Bitcoin being the obvious options there. Anyway, I'll pause there for a moment.
Yeah, it's super interesting. The institutional money really coming into Bitcoin now, the institutional kind of wave of seeing, hey, this asset is not just something that nerds like to speculate with, like cyber nerds, but also like Austrian economic nerds or gold bugs. It's actually something really valuable. And I guess MicroStrategy kind of started that whole thing of institutional buying for Bitcoin. It was the first publicly traded company, and then afterwards more and more companies came. But honestly, it's even a little slower than I expected. Those institutions have a lot of processes and runway of saying, hey, we need to speak with this person, and there might be actually a CFO out there that really likes Bitcoin, but he is afraid that if he now goes all in Bitcoin also with the company, he might lose his job, because maybe all around him people don't get Bitcoin yet. So there's a really interesting dynamics going on with institutional money and in connection with Bitcoin these days. And I feel like that career risk might flip a little bit in the other direction, where we are still now in the phase where it's a little bit risky and people are a little bit afraid of that. But at some point it will be risky not to have to not have a Bitcoin strategy. How do you look at that?
Oh, I think you're spot on. I think we're in both those key points. So one is career risk. It holds people back, which is a real shame. But also at some point that will flip. And it will be a career risk not to have seriously considered it. And I think that will be, and you mentioned essentially Bitcoin Treasury companies there. It's not just holding Bitcoin on balance sheet. We have what we have here is a new money that's coming along, and it's better than everything else. And all the sort of salability across time, which is the store value, but also salability across space. And how does that then integrate itself to each company, which each company does things in a different way. Obviously, you've got tons of different industries. It's going to affect some more than others. But this is big. This is huge. And the best analogy I can think of, which even in itself isn't enough, is the internet. And 25 years ago, possibly 30 years ago, when people were starting to talk about the internet and the adoption rate was sharply moving up, but still from a very, very low base. It's hard to imagine the companies and how they ran 25 years ago compared to now. The internet has changed so many things. And money is even bigger than transferring value, is even more than transferring information. It's even more impactful and influential. And so every company should be, even only from a defensive point of view, should be looking at how they do business and how Bitcoin can affect them in so many different ways. So obviously there's a store value you can put some on your balance sheet. That should be pretty much a no-brainer for a lot of companies with a long time horizon. But then you've got, okay, how are you going to accept Bitcoin? If you're a retailer, for example, then you've got that. You've got the shop front. You're taking money from individuals, customers. How do you do that? How do you do that more effectively? How do you stand out from the crowd? What do you then do with the Bitcoin when it comes in? How do you pay your staff? At the moment, it will be in the local currency, I suspect. But how do you transition that towards Bitcoin? Are there other things in the company that happen, the way that you maybe incentivize staff in other ways, then actually incorporating Bitcoin could make a huge difference and really supercharge your business as we move over, who knows how long it's going to take, let's say 20 years, to move from a substantially fiat economy to a substantially Bitcoin economy. There's going to be a lot to think about, and a lot of processes within companies and organizations are going to need to change.
I 100% agree. And I also like the point that you made there. I mean, that money is such a big market. And I think that's what a lot of people kind of miss. And they say, oh, like even with altcoins, even if there's, as you said, there might be some technical interesting thing going on. I don't think so, but maybe you just say, like, let's say there is something. Even if there's merit to an altcoin, it might actually have utility. If that's the case, the opportunity of that altcoin might be like what can it be, like a few hundred million, maybe $1 billion, or like whatever the opportunity of that market of that one project is, because there are also competitions coming to that and those things. For Bitcoin, it's 400 trillion, 500 trillion, whatever the money market, the money opportunity is, whatever the number is. I also heard like 800 trillion, 900 trillion. I guess every year this number will slightly grow depending on how much we print. So even if you see like, oh, there might be some other projects, you're like, but this is the real thing. Like Bitcoin is the actual paradigm shift, the actual game changer in this generation, in this civilization that we are currently in. Like, why use any brain cells for something else currently? That's what I'm thinking about.
Yeah, the market is so huge for money, as you say, and not only, maybe someone can find a particular thing in an altcoin that is that's a neat piece of technology. But one, it's probably going to get diluted because the supply of that old coin is probably infinite. And secondly, someone else can just take that idea, and it could be built on Bitcoin, or it could be built in some other way. There's no moat, particularly around that altcoin. So you've got two huge problems. And from an institutional point of view, we want to buy assets strategically. So You might have a little bit of rebalancing and so on around, operating the portfolio. But essentially, you're often looking for, what can I do for the next 10 years? What's my plan? What strategic allocations make sense to me, given the objectives we've got, etc. And so, if you look across, and we call them the regulator over here in the UK likes to describe them as crypto assets. If you look across, you've got Bitcoin, you've got everything else, and hand on heart, the everything else, can I be confident that it'll be around in 10 years? Nope. Can I be confident that Bitcoin is around in 10 years? Yes, absolutely. So there's a big difference, and I find it difficult. I would find it incredibly difficult to advise clients to use the altcoins and go into there, because it's just much more fluid, for want of a better word. And where institutions need to be a lot more strategic. I think when you combine that with a lot of institutions are quite rightly thinking about the effect that their company has on their staff and on the world, wanting to do the right things from an environmental and a social point of view. Well, having a sound money ticks so many, if not all of those boxes. Yes, not all of it may be happening. It takes time for it to happen. But having a sound money enables and gives, primarily because it gives people longer time horizons, sort of low time preference. So that is a very strong reason why institutions should focus on Bitcoin.
And that's why you also played a crucial role in getting Bitcoin into UK pension funds, if I understood that correctly. Yes.
So the way that we looked at it was that because we advise across all types of assets, and each of our clients has got different objectives, and we need to. A key starting point is saying, okay, you've got certain objectives. We've figured out what they are. We've got this range of assets that you could use in some way to achieve those objectives. Let's work through the list and see which ones are relevant and which ones aren't. So from a Bitcoin point of view, what we did is he added Bitcoin to that list of assets. And when you start then applying it to the same analysis that trustees of pension schemes have been doing for years and years and years, it's going to be relevant for some, not for others. And a key filter is what's their time horizon. And some pension schemes over here, they're looking to pass the entire pension scheme over to an insurer pretty damn quick, maybe within the next year or 2-3 years. In which case, we're expecting Bitcoin. Who knows? But we're expecting Bitcoin to be short-term, very volatile, long-term to have huge potential. That's the headline, I suppose. If you've only got 2 or 3 years, you've no idea whether Bitcoin's going to be up, down, sideways. Where you can be a lot more confident the further out you go. And so this particular pension scheme has got a 10-year time horizon. So that's comfortably, well, probably 4 or 5 is probably a threshold where it starts to make sense as a small allocation within a portfolio.
Yeah, it's like if you're in Bitcoin under 4 years, you can also not be in Bitcoin. Like it's like under 4 years. If that's your time horizon, it's kind of hard to be in this asset. You probably are good. Like you probably make money even if you're under 4 years in Bitcoin, and you probably should still do it because chances are if you get into Bitcoin, all of a sudden you get educated and probably you stay longer than 4 years. That's why I always say to individual people, I say like, oh, like maybe I only want to have a few years in Bitcoin. I'm like, oh, go ahead and do it. I think you will stay longer if you get educated because this is one thing that I see constantly with individuals. Once they tip the dose in and they're like, oh, like I have a little bit of Bitcoin, all of a sudden they're paying attention a little bit more and they're getting educated, they're buying Bitcoin books, and all of a sudden they really transform. But the realistic time frame on Bitcoin is 10 years, 100 years, forever. That's kind of my, and it's super funny because in Austria, we have a pension fund that you cannot really choose. Like, you have free options, but you cannot choose outside of those free options, and none of those options include any Bitcoin. And so I just said, okay, this money that goes to those pension funds, I never see again. If I see it again, I'm happy, but I just like write it off as a special kind of tax. And I focus on my Bitcoin, and Bitcoin directly, like 100% is my pension fund. And I'm astonished how little Bitcoin plays currently a role in pension funds, even as a small diversifier. Like, they can put like 0.5% in Bitcoin, and it might make, like, that 0.5 Bitcoin might make a difference if this goes crazy up in the next 5 to 10 years. But if it goes to zero, it's also not that bad. It's just 0.5%, like this is I think BlackRock called it a unique diversifier with really unique properties for an asset allocation standpoint. Even if you are not the Bitcoin maxi like myself, I think a small Bitcoin allocation from a portfolio allocation standpoint makes sense for people. How do you look at the allocation and why so few of them actually understand that?
Yeah, I think you're right in principle on that. So I think there's a big difference. Well, there can be a big difference between individuals and what they do with their own money and institutions. And one of the things with individuals is that we've got, normally our time horizon is decades, unless we're at a certain age or we've had some bad news. We've got a long time horizon, right? So we're looking decades ahead. In which case, that's what we're focused on. Institutions, there's a lot of different flavors or objectives that different institutions have. So some have really short time horizons. They're like, almost literally, they've got sort of £100. They need to pay out £100 in a year's time. They don't have the flexibility, the capacity to have lots of volatility within that. And also a lot of institutions, they're taking in the UK anyway, taking in pounds sterling, and they're paying out pounds sterling. And maybe that pound sterling is sort of fixed. So they're aiming to have, they need to pay out £1,000 per year to a particular person. That might be the sort of contractually, effectively, what is happening with that particular pension scheme. In which case, there's effectively a limit on how much money they need in the scheme, in the pension scheme, to be able to pay that £1,000 a year to that particular person. Once they've got enough, they've got enough. They don't need to take infinite amounts of risk. They don't need infinite amounts of return. So that's there. I'm describing defined benefit pension schemes, which is we've got 5,000 of them in the UK. There's a select number of other countries around the world, Netherlands, Ireland, some in the US that have these, but most countries have what we call defined contribution or money purchase. And that's where the employer, the employee, similar to what you've got, although yours sounds like a state-operated enterprise. So employee and employer put in some money, and then whatever it buys at the end, whenever you retire, that's what you get. It's whatever it is. There's no promise or guarantee made in terms of what the purchasing power would be or what it would be able to buy, or in terms of a fiat currency amount or anything like that. So there are two very different types of pension scheme. They operate in very different ways. And so it's critical that whoever's in charge of that pool of assets is thinking very carefully through whether they can justify that, not only Bitcoin allocation, but an equity allocation or some other kind of a volatile asset. And then it's a case of putting them together so that they get the right overall balance of risks. And that's one of the beauties of of Bitcoin is because as soon as you start adding it to portfolios, even at only small amounts, so this pension scheme in October was 3% of the assets. But if it's 2, 3, 4% of any portfolio like this, it's going to be probably a little bit more volatile than it would other be, the overall asset amount. But the expected return, the potential, the growth potential is much higher. And so that's the trade-off that institutions should be looking at. How much could I gain versus how much could I lose? And what we did as well for this pension scheme was we put it in the context of their specific objectives. So ideally, they want to be able to get to the position where they get hand everything over to an insurer. And maybe that'll take 10 years. And the analysis we did, which I'd encourage every pension scheme in the land to do something like this, which is say, okay, if we put 3% Bitcoin allocation in and it immediately forces, this is worst case scenario, immediately forces zero, never recovers, what's the impact on the overall objective? Well, before you expected to get to your objective in 10 years. Now we rerun the analysis, you expect to get there in 10 years, 3 months. So it's obviously worse because you've just lost some assets, but it's not that bad. It's not that material in the big scheme of things. And then we looked at the other scenario, which I think we looked at the last 5 years, which was 40, 50% returns. And if they applied for the next 5, 10 years, what's the impact on your overall objective? And that brought the 10 years down to 8 years, right? So you got 10 years to 10 years, 3 months, 10 years to 8 years. And so what that highlights really well is the asymmetry of returns that could come through, and why it makes sense to have a little bit of Bitcoin if you've got a long-term portfolio.
That's super interesting because it can make a huge difference, even like a small allocation, the asymmetry of it makes a lot of sense. What would you say is the current state of like pension funds and those big individual institutional players of understanding Bitcoin or thinking about adding Bitcoin to a portfolio, to a balance sheet, and how many do you think will maybe go ahead with some Bitcoin strategy in the next like 5, 10, 15 years?
Well, I mean, I think 5, 10, 15 years, a lot will be forced to think about it. It's one of those things. If Bitcoin survives, which I expect it to be, but obviously it depends on it. As Jeff Booth frequently says, if it remains decentralized and secure. So if it survives, then it's going to force people to look at it over that kind of period of time. If we look at shorter periods, let's say that over the next year, then I think it's going to come down to that career risk point. So the level of knowledge in the industry is, it's very different between different people, but you've got some people who maybe for whatever reason, maybe it's their personality, maybe it's because they got to a certain point in their career, they don't feel the career risk as much as they maybe used to. They're more open-minded. They're willing to say, okay, it's not dead yet. Maybe there is something in it. It doesn't mean they necessarily buy any for their clients, but it means that they open their mind and they explore it further. We then have a large number of people who are either they've got a little bit of knowledge. You know what they say about a little bit of knowledge can be a dangerous thing, because the little bit of knowledge that they might have is based on newspaper headlines from 10 years ago. It's going to destroy the planet and all this nonsense. It's quite difficult then, particularly if they're busy in their day job or they have that career risk, because there's no incentive for them to explore it further. And that's a real shame. And I think it's a shame for them. It's a shame for their clients. I mean, arguably, and this is why we sort of talked about it in terms of just putting Bitcoin on the asset list and then we explore it in the same way we explore everything else, every other asset. I think we're at the stage now where if someone is, whether it's a trustee or a treasurer or a charity trustee, if they're looking after someone else's money, we talk a lot in our industry about a fiduciary duty. What are trustees or other institutions, what are they required to do to make sure that they are appropriately looking after someone else's money? I think we're at the stage now where if you're not seriously at least considering Bitcoin, doesn't mean you have to buy it. If you're not considering it, it's questionable whether you are properly fulfilling your fiduciary duty.
Let's take a break for a moment and appreciate the beauty that Coin Vigilante has made with the Bitcoin watches. Those watches are the most amazing, the most elegant way of showing that you are a true Bitcoiner. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. And now if you have Bitcoin, I really do hope that you don't have it on exchange. But if you do have it on exchange, I have two ways for you to deal with that. The first way is you put it on a hardware wallet. That's the entry for you to get into the self-custody game. I recommend BitBox, Bitcoin only edition for that. It's a super simple and secure way. And if you check out the link in the description, you even get 5% off if you use the code Robin. And the second way is the Bitcoin Way. The Bitcoin Way is your all-in partner in terms of how to get the most out of your sovereignty. They will personalize for you a self-custody setup that is perfect for your individual situation. They will show you how you can secure your own devices. Securing your Bitcoin is not enough. You also have to keep all your devices secure. One topic that is overlooked often is the inheritance plan. What happens with your Bitcoin once you are no longer here? Do you have a plan for that in place already? And last but not least, if you're in a jurisdictions where you don't feel safe, it's better to get a plan B. For all that, head over to thebitcoinway.com/Robin to get a 30-minute free call. And just a quick side note, I will be for the first time ever speaking at the Bitcoin Prague event in June. It will be absolutely legendary and I'm really looking forward to seeing all of you there. You can get your ticket in the link down in the description of Bitcoin Prague, and very important, use code Robin to get 10% off your ticket. I'm really looking forward seeing you there. It's a good point because if I ask someone else to take care of my money, then I want him to consider all options, and then he should have a good answer why he didn't do the Bitcoin strategy. And Bitcoin is now, I guess, because like there's always argument, oh, like a person cannot look at all assets, like there's too many assets in the world. But Bitcoin is at that point where it's too big to ignore. So what we are now bigger than silver, and we are on like, I don't know, like top 6 assets in the world. Some companies, gold and some things that are still in front of Bitcoin. But it's just you cannot dismiss Bitcoin like you could dismiss it like 5 years ago. 5 years ago, you could say like, oh, maybe like this might go away. It's just like some random internet thing, like 2019 maybe. But now with BlackRock, big institutional money, now with Coinbase in the S&P 500, with Tesla in the S&P 500, which also holds Bitcoin. I think Strategy might soon be in the S&P 500. We literally have the US president talking about Bitcoin. It's now at the point where you can't ignore it anymore. So you have to consider it. And if you don't consider it, do you really fulfill your duty to at least give it a fair shot? And then you might look also you might have a career risk, and we literally talked about that in 2 episodes before that. There's this career risk right now of when you are now aggressively in Bitcoin as a CFO of a company, you might say like, oh shit, when Bitcoin now goes down for a year, because like 2026 maybe is a down year, and then your company has to report losses or whatever, you might be in a little bit of a you have to explain yourself and you have to defend Bitcoin. And if they're not Bitcoiners, maybe you lose your job and those kind of risks. But if you are a Bitcoiner as a CFO right now, and you really believe in that, and you have so much fear to come out of that, and you don't do that with the company. If you now get rich from Bitcoin in the next 5 years, and the company is saying to you, oh, you got it privately 5 years ago, like, why did you never pursue that on the company level? Why did you not bring out Bitcoin for us? And the company is like, hey, like, you knew about Bitcoin, you did it privately, but as a CFO on our company side, you did not even bring it forward as an idea, or you did not really pursue it. So there's this different career risk of now already starting, that in the future they might look back at the CFO and it's like, oh, it was obvious, like 2025, even the president was talking about it. Why haven't you not done anything with Bitcoin? Like, at least like a small position, like 0.5% cannot hurt, right? So that's an interesting perspective in the future.
Yeah, and I think that's maybe I think of a few things there actually. So one was that I do have a lot of sympathy for trustees or treasurers, finance directors that are coming at this. And the first thing that Coinbase is obviously an example of that, of an exchange. There's lots of others, but that's sort of very people will see that very quickly, and they look at that and say, well, but there's I don't even know how many altcoins there are now, but let's say there's I don't know 100,000 or something. They look at how am I meant to distinguish between the 100,000, and therefore it's too complicated. Let's park it. Where I think, so that's why I think distinguishing early on between Bitcoin and everything else is so critical, because not only is it which one can you be confident will be around in 10 years. It's not just that. It's also the way in which you allocate it within a portfolio. So if you've got a cash, fiat currency, cash allocation, a traditional way to try and protect against some of the debasement would be to have a bit of gold. So maybe there's a bit of that there. Bitcoin naturally fits into that allocation in some shape or form. So that's the way that sort of cash allocation should be thought about. Over here, in a completely different part of the portfolio, maybe there's a technology allocation exposure, in which case I think you could legitimately say, okay, if we are going to consider crypto in general, not Bitcoin, crypto, then that's the context in which we could do it. And then you should be comparing, as an institutional investor, comparing crypto against technology companies that, your Googles, your Microsofts and so on. It bends those companies against a FTSE technology index, or, those kind of companies. And I think very quickly, from an institutional point of view, you look at that and you'll say, I've got these companies over here that are listed on the stock exchange. They disclose huge amounts of information in terms of what they're doing, why they're doing it. They're not all going to survive. No, they're taking risks, company risks. But at least I can understand and get information on what they're doing. And then over here, I've got crypto, where it's a lot of work to try and work out where any benefit could be, where any value is, and even then, not so sure. So I imagine through that analysis, we end up with people saying, okay, my technology allocation, I'm just going to buy a fund which buys listed stocks. My money allocation, I'm going to have some kind of split between my fiat currency, gold, and Bitcoin. And so that makes a big, I think, a big difference. And I think one of the things that helped there, you mentioned it actually, was Trump's executive order on the strategic Bitcoin reserve and the crypto stockpile. Distinguish between the two, so separated, but also we're going to try and buy some Bitcoin. We're not going to sell any. We're going to look to manage or sell, and certainly not buy any crypto. So I think that was very helpful. So another point I thought of was from a corporate treasury point of view. For many years, well, the last 40 years, really, we've had reducing interest rates in the market. We've had some points at which inflation has flared up. But generally speaking, inflation has been coming down, or it's been fairly low. If you look over the 90s, the 2000s. And so from a corporate treasury point of view, if the focus is on increasing the nominal value of the corporate treasury, and therefore being ready at a moment's notice to support the business in the way that the business decides it needs to be supported, that was, I think, a legitimate way to a simplified version, but a legitimate way to look at managing that corporate treasury. The problem we have now, and why that model doesn't work anymore, is because we're now in an inflationary environment, not a low inflation environment, which we have been for previously. And so the problem there is that even if you're increasing the value of that corporate treasury in nominal terms, you're not increasing it in real terms. And there could be sudden spikes in inflation, which means suddenly the real value of that corporate treasury, could drop 10% or 20% over a year or two. That could have really big implications for being able to support the business, because the business itself is going to need to employ real people. It's going to need to buy real resources, and they're going to cost according to whatever is happening in the economy. And if those prices have shot up, that corporate treasury is then a drag on the business, a cash drag, if you like, rather than supporting that business. So I think that should be increasingly talked about topic, and the natural things to do. It's quite difficult for corporate treasuries to buy some of the sort of the weird and the wacky investments that other institutional investors can do, but that's fine. They don't need to. For a lot of time, they'll have maybe a really pretty large allocation to the local fiat currency, a little bit of interest on that, just to hopefully not lose too much ground. And then at the other end of the portfolio, they could have a little bit of Bitcoin too, and then you don't need a huge amount to have a really big impact. So a barbell type of approach. So that might be something that we see coming through for a lot of companies as a starting point. Companies don't have to do what MicroStrategy are doing, and issue lots of equity and issue lots of debt to buy more Bitcoin. That's extreme on the spectrum. For most companies, it's just saying, how do we protect what we've got? How do we continue to support the company? The third point I was thinking of is that not only does a company have a fiduciary duty on behalf of the shareholders to look after the assets of the company, but it also has a duty to its staff. And we are in a economic situation where there's a lot of uncertainty. We are seeing, the way I think about it is that there's a big bubble. There's a lot of stresses and strains within the economy, within the monetary system. No one knows the exact timing. It's like, when does the last snowflake land on a snowdrift to turn into an avalanche? No one knows exactly when that's going to be. But we know, we can see the big snowdrift. And we know that if it keeps snowing, it's going to turn into an avalanche. And so with that in mind, companies should not only be looking to look after their shareholders from a maintaining value of the business point of view, but they should also be looking at how do they help their staff? How do they support their staff through what could be an extremely difficult time? And there may be a need, even if it's only a plan B, if we go through some kind of monetary reset or high inflation period, which is, I see it as essentially inevitable. We just don't know the timing. Then what is each company going to do? How are they going to continue to pay their staff in a way that supports their staff? And so a plan B could be to get the infrastructure set up so you can pay people in Bitcoin, even if they still take the vast majority of their salary in the local fiat currency. And one of the one of the things that can help with as well is, if let's say they're just paying £20 a month of Bitcoin to their staff, then that does what you mentioned earlier, which is it means those people suddenly, after a few months, they've only got 100 quid's worth of Bitcoin, but it's still more than zero. And it being more than zero means that normally people start, what is this thing that I've been given? And they start reading and they start watching podcasts and they start, studying this area, and that can then change minds very quickly once they understand the benefits.
It's super interesting when we think about the hurdles that might come for institutions coming forward, and there's like more and more hurdles gonna get out of the way, and those hurdles are differently perspected, differently looked at the catalysts for adoption, and we're seeing now what's kind of standing in the way, and for me it comes a lot down to just time and education. It's like we need more time for things to process, and then we also need education in all the right parts, because even if there's like a regulatory thing that stands in the way, like we had in America with the SAP 21, or like many other different things that kind of was like hard for people to do it because of that. That's also kind of just comes down to educating the regulatories and then changing these rules. And there's like a lot of educational hurdle coming before we get into real adoption. I mean, we have been in really a fast speed adoption wave since the starting. There's always this talk each cycle of like, oh, is it a super cycle, or is like how fast is it? No, I think since 16 years we're in an extreme fast super cycle. If you look at, we are 16 years old, it's a teenager, and we already are one of the biggest assets in the world, and we already are talked about by everyone. Like everyone heard about Bitcoin. Everyone has, sometimes not a good, but at least they have an opinion on Bitcoin. Maybe not always an informed or educated one, but they have one. So that's really interesting. Is there anything that we might have not mentioned till now that you're really looking forward as a catalyst for institutional adoption going forward? Any hurdles that you're like, oh, like if that gets away or if that gets better, we really could accelerate that?
I mean, I think there's been a few hurdles, and I think we've solved some of them. So, for example, custody would have been a good example of that. So, I can't imagine that you'd have, a company board or a trustee board a few years ago, having 12 words on a piece of paper to maintain. That's just not workable from an institutional point of view. At least for now. So there needs to be other custody options, and now there are. But that's only of a year ago or so that has actually been available. And so people are still transitioning. If they only thought about custody, a couple of years ago, they need to update their thinking in terms of what's now available. Another one is ESG, environmental, social, and governance factors. It's quite big in the institutional world. There's still a general surprise about how ESG friendly Bitcoin is, but I think that'll take a bit more time. But that message, I think, is slowly getting through. And once people look into it, they realise how relevant Bitcoin is to those to having clean air, clean water, clean, good soil, to helping people out of troubled war zones and oppression around the world, and so on, and how a sound money can help with all of that. So I think that's still happening. One of the we touched on it earlier about how if you grew up in the institutional world, unless you're a little bit crazy like me, then you're on a you feel quite comfortable on a treadmill through a career, and this, you join as a junior analyst, you then get promoted to a certain level, and then so on, and then you're client facing, and then you partner of a firm or something, and you go through that process, and then you retire, right? And that is your expected career. There's nothing fundamentally wrong with that, but if the issue is, if you try and talk to someone in the middle of that journey on the treadmill, on that career treadmill, you're asking them to step off the treadmill, or at least to think about stepping off the treadmill. And that is way too risky for many people. Also, I remember doing the actuarial exams, and there was one on economics, and it was essentially Keynes versus monetarism. That was it. And I said, are you sure that this is all there is to economics? All we're doing is drawing a few lines on a few charts. And he said, well, do you want to pass the exam? Well, yeah, obviously I want to pass the exam. I just want to get it out of the way. But then when you're looking back, you realize you just wasted loads of people's time with economics that doesn't actually make any sense. And so a lot of people will have to go back and unlearn things like that. And the problem is, it just takes time, even for those that are willing to do so. So we're in a process. I think the process is helped and encouraged by things like the price of Bitcoin going up. Things like then people keep thinking, why hasn't it died yet? In theory, it's meant to have died. In practice, it hasn't. And at what point do they then challenge themselves to say, maybe there's something here, maybe there's something I need to dig in a bit deeper, maybe I'm missing something. So I think that will all help. I think the newspapers seem to be turning in terms of the ESG messages, which is positive. Daniel Batten does some great work in terms of digging out stories and looking at studies and so on. So he's someone that's worth checking out. Stuff that's happening in America with Trump. I'm not saying it's all good. I winced when Trump coin came out. But, that aside, some of the stuff on Bitcoin should be very helpful, and that gives a solid foundation. So you've got lots of different things that are happening, and you've got lots of different things at a sort of global level. You've got lots of things that happen at a grassroots level. And it's a case of, as they come together, it's not a linear impact that they'll have, because they'll be reacting with each other along the way. It's a form of network effect, I suppose. And so that's where I think the gradually then suddenly probably comes from, or at least should apply, because at some point we will get that suddenly. But we've no idea, just like that snowflake landing on a snowdrift to turn avalanche, we've no idea of the timing.
Yeah, it's you have now this interesting opportunity of Bitcoin, and it's kind of coming. Nobody can really tell you when exactly, or how fast, or like how rocky the way to there will be, but it's coming, and this is the exciting part. It's actually you said it previously. You said early on, I think Bitcoin makes things better, or something along those lines. How do you expect a Bitcoin world to look like? How do you imagine a world looking different because we use a different, better sound money?
In ways that I'm not sure I can even imagine. But I think that's the thing. When you start looking into, when I started looking into the problems with fiat currency and all the different ways in which it can affect things that we see around us, what we need to do is we need to separate out cause and symptoms. And the problem is that for the vast majority of people, understandably, it's not a criticism, understandably, you look around you and you see lots of symptoms. You think, I don't like that. I don't like this. Why is, whether you're talking about the food quality or, architectural quality, or a whole range of different things, or what feels like society getting frustrated and fed up and getting angry. All those things are symptoms. And then you drill down, it doesn't mean nothing else has an influence, but you drill down to the core of what, like the original sin, if you like. And that's the ability to print money out of thin air and distribute it politically, and that creates an unlevel playing field. One of the wealth inequality gap is something that a lot of people quite rightly are unhappy with. There'll always be some wealth inequality because some people would deliver more value to society than others. That's inevitable. But what we're talking about here, what I'm talking about, is the artificial wealth inequality gap. That shouldn't exist. It only exists because we have a money which creates an unlevel playing field. What Bitcoin is, what gold was sort of. Gold's done a bloody good job for 5,000 years. So, we should give it the respect that it's due. It's just that Bitcoin's better. And Bitcoin provides a level playing field for everyone. And that, I think, affects so many areas of our lives. If when anyone's listening to this, as they're walking around and they get frustrated with something that's going on in the news or whatever, and think, if there was a level playing field, would that issue exist? 9 times out of 10, no, it wouldn't.
I love that. Yeah, and gold was an amazing, and it's the best solution till electricity and internet came along. Then all of a sudden this was useless. It's like all of a sudden you're like, hey, I can send messages to my friend in America. Like, why can I not send gold to my friend in America? Oh yeah, that's Bitcoin.
I suspect we'll go through a transition period where gold will still provide a lot of value for a lot of people. But given enough time, and we don't know what time that means, given enough time, then Bitcoin will shine through. It's got better qualities from a money perspective. Not least, it's not physical. And so those will shine through over time.
How do you actually look at this? One more topic I want to get into with you is circular economy, and we talked a little bit about it before. It's super interesting that someone brought that point up, I think also a few days ago in a podcast of mine, where he said gold now is kind of a store of value, but it failed as a medium of exchange, and therefore it cannot capture the full potential as a store of value because it's kind of hard to like spend around. And so you rather just go to like a Bitcoin that you can already spend a little bit. And then we have, and you mentioned him also before, Jeff Booth, who said on the last podcast I had him on, that if Bitcoin fails as a medium of exchange, it will also fail as a store of value. Which got me thinking of like, okay, gold clearly failed as a medium of exchange. But it is still the biggest asset. So I don't know if it failed already as a store of value, but it might fail long term as a store of value if all the store of value also goes to Bitcoin and gold kind of gets to a utility value. Just for the record, I think that's a long ways out that gold gets demonetized. Many other things probably get demonetized beforehand. But Bitcoin has that store of value and medium of exchange side of things. How important is the medium of exchange actually for store of value when you look at what Jeff said and how those things correlate?
So, I think Jeff's amazing, by the way. So I'm not sure exactly of the context of that comment, but I suppose one thing I'd say is that store of value, it's still a medium of exchange. It's just a medium of exchange with my future self. So it's already acting as a medium of exchange in that sense. Having said that, I do think we can't expect it to happen as quickly as store of value. Store of value happens first, then medium exchange, obviously some overlap, then medium exchange, and finally we'll all be talking in terms of how much is a pint of milk in sats rather than in pounds, dollars, euros. So it needs to go through that process and needs to be given time. That's what often a lot of people don't factor into their thinking is things need time to develop. But I do think we're at the start of that medium of exchange adoption curve, if you like. We've had it for store of value, and that it's got a long way to run. But we need to get it going for medium exchange. And therefore, I think it's important that we we support, one approach is just to get out of fiat entirely. Just hold Bitcoin, just spend Bitcoin, saving Bitcoin. That's a lot. That's a purist way, I suppose, of really taking it to its logical conclusion. And I think is aligned with Jeff's view that if you're still using the local fiat currency, you're effectively supporting that. So why not support the system that you believe in and that has your values rather than the one that doesn't? So I think that makes a lot of sense to me. But we need to keep pushing that medium of exchange. And as people build up enough Bitcoin themselves, then they'll feel more comfortable spending it locally. And we're seeing, I don't know, I need to check the numbers. I think we're up to about 400 or 500 places in the UK that accept Bitcoin. So it's still quite small, but it was probably zero 3 or 4 years ago. Maybe not quite zero, but close to zero. So that number of places is growing exponentially. So I'd encourage everyone to spend some of their Bitcoin.
It's a good point of if you use voluntarily fiat, you're supporting it. I mean, if you're forced to use it, to pay taxes, to pay at a restaurant because they don't accept anything else, what choice do you have? Maybe you can also go really pure and say, hey, because even in Vienna, there are restaurants that accept Bitcoin. So I only go to restaurants that accept Bitcoin, but that shrinks down your restaurants to like 5 or like a small amount.
So you could be, so you're supporting a particular money if you have a positive value of that currency. If you have a negative value, then you're doing the opposite. If you have zero, you're not supporting it at all. If it's negative balance, then you're unsupporting it, if you like. So, some people so they go to a restaurant that doesn't accept Bitcoin, but they pay on a credit card. So they're then negative fiat. And then they may pay that off with their next pay packet or from their Bitcoin. And so that is a way of essentially getting around that not everyone accepts Bitcoin yet. But then if you can send your business to places that do, then you're encouraging more businesses to accept Bitcoin, and the snowball effect will take place.
That's actually how I do it. I try to stay at 0% fiat and 100% Bitcoin. And whenever I spend, it's from overdraft, and then I just pay that off with Bitcoin. If I get more fiat in, then I'll buy Bitcoin with that. But my income is already like 70% in Bitcoin, and my expenses are, let's say, 15% in Bitcoin. So I do have to sell some Bitcoin to pay the bills. It's a huge, ever since I decided that, and it's not that long ago, actually, it's like a couple of months ago that I decided I'm just 100% in Bitcoin, because I had that thing, do I go 100% in Bitcoin, or do I borrow out my Bitcoin and get fiat? I have both those strategies in mind, but I wanted to go with the one where I can sleep sound at night and where I have no worries at all. I just have Bitcoin as my savings device. And when I spend, I have my fiat bank account and I just pay it off with Bitcoin. It's super easy. There are providers where you can go from your Bitcoin wallet to fiat bank account in under 5 minutes. It blows my mind, from like a real Bitcoin wallet, like not an exchange, like an actual Bitcoin wallet with your own seed phrase and everything like that. You directly to your own wallet. Do your own bank account. So there's no excuse. And people say like, oh, taxes and stuff like that. Yeah, but you only pay taxes if you made a profit while holding Bitcoin. So if you held fiat instead of Bitcoin, you wouldn't have made the profit. So you wouldn't have to pay the taxes. So holding the Bitcoin only gives you the taxes if you actually are in profit in that way. So I don't know. It's kind of a no-brainer for me to be as allocated as possible in Bitcoin. I don't know how you look at that.
Yeah, increasingly so. I mean, I'm not saying anyone should rack up big credit card bills that they shouldn't pay off. Pay off every month, I think, is the right advice from those people that can give that kind of advice. But it's just a way of sort of managing the transition over the next few years. I mean, one thing that will help actually is that our Financial Conduct Authority, the regulator, is over here in the UK, has got a roadmap to essentially put regulations in place, and exactly all the implications of that is not yet clear. But it means that it means you've got a framework. It means that people are, they're not banning it because they've put a framework in place, and the regulations around it and how you operate and so on. And so I think that'll give a lot of people more comfort, and actually hopefully helps some people avoid some of the altcoins, which some of them are just pure scams as far as I can tell. So just avoiding them entirely, hopefully focusing on Bitcoin. They're worried about people taking a lot of credit card debt out to buy crypto assets, as they call them. Sounds a legitimate concern to me. What people should be saving in Bitcoin. They shouldn't be. It feels too much like gambling if you're taking out expensive debt to buy stuff that you don't know what's going to happen in the next few months.
Yeah, and it's just, I think even if you borrow against, I mean, it's a hard argument to make, but I think if you use the fiat system, if you're not forced to use it, you are supporting it in a way. So using the fiat system to get more Bitcoin or to borrow against the Bitcoin, I'm just not a fan of it. It just feels wrong for me, but maybe I'm just too pure for that. I have one question that I ask each and every one of my guests, and the question is, what can we learn from you besides Bitcoin?
Oh, okay. Well, that's an interesting question. You mean about me?
It is entirely up to you. I let the question open, so like about you personally, or like a skill, or like something you have learned, or like and wise sentence you want to share with us. Like whatever you want to share, you can share.
Okay, I'll mention something that they did a couple of years ago, and was incredibly enlightening, I think, on the overall journey. So I took my teenage son to Tanzania, and it was, it's quite a long way from UK to Tanzania, and it was a fascinating experience. And we were helping out a charity, and we were doing things like on a building site, building a classroom, and planting trees and things like that. So trying to be as useful as possible. And one of the things, there's two things that I picked up which were of particular interest to me. So one was that there's motorbikes all over the place in Tanzania, and they load them up ridiculously, right? So one had a trailer on that I saw. One was they were literally holding a pane of glass. The two guys, one was driving, guy behind him on the motorbike was holding a pane of glass like this. Absolutely ridiculous. So they're piled up, tipping over left, right, and centre, But what I loved about it was that it gave it a buzz, and apparently that's really only in the last few years that there've been as many motorbikes as they have, and it shows economic progress. It shows, I guess, some kind of entrepreneurial spirit in the way that they're using the motorbikes. So I quite like that from a different perspective point of view. The other perspective that I picked up was around how they approach money. I have to sort of dig deep to try and remember some of those principles, but they look at money very differently to how we look at over here. So they essentially, if you have money in your pocket, it seems to be, this is obviously general rule. There's going to be different people have variants of this. If you have money in your pocket, it doesn't really belong to you. It belongs to whoever is the most in need. And that was quite interesting. I guess it was understandable because you have a continent there that's had havoc wreaked, whether it's through different types of a disaster, whether it's natural disasters, whether it's the Western nations going over and invading and colonizing, whether it's internal political struggles or tribal struggles. You don't know from one day to the next whether someone will come along and you still have that money in your pocket, and therefore you might as well do a favor for someone now, because tomorrow you might need the favor back. And I thought that was interesting to me around the sort of the high time preference, I suppose, idea, and that there seems to be a very high time preference because they don't know what's happening from one day to the next. There was quite a bit more on that, but that I found that particularly interesting. And at some point, I've got no plans to yet, but at some point I'd like to go back and see how things have changed.
That's interesting. I've seen that there's in Austria, you cannot think of that, but loading trucks, as you said, with this glass thing, I mean, my girlfriend is coming from India, so she saw that a lot in the world, and I saw it the first time ever in El Salvador, actually, when I was there for the Bitcoin conference, and it was so unbelievable for me. There was just a bus where you can stand on the truck bed on the bus behind, and people were just jumping on it while it was still like driving, and they were jumping off it, and there was like no guardrails, nothing. And it's really unbelievable. In Vienna, we have at some stations already the glass in front of the U-Bahn, so you cannot jump into the U-Bahn. And then in some countries like El Salvador, like probably like even bigger in India and other parts of the world, you have just like huge trucks where you can just jump on and off, and also the thing of having just a motorcycle is really big, and transporting bigger than you think things with that small motorcycle is apparently a thing, and I've seen that also sometimes. So that's super interesting. So different cultures deal with those.
I did get a bit addicted to taking pictures of motorcycles when I was out there, because so many crazy ones.
Yeah, they are really crazy ones. I have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, do you think borrowed dollars are the best layer 2, aka the best way to spend Bitcoin? It's we already talked about that a little bit.
What did you say? The what to dollars?
Yeah, borrowed dollars. So what we talked about that is.
I think you just spend the Bitcoin. Stay unleveraged. Don't put the rest of your stack at risk. It's money. It's there to be spent when you need it. Hopefully, you've already got into your mind that you're only going to spend money on things you really need. So, if you really need it, you should just spend your money.
I love that. I agree with that. Thank you so much, Sam, for being on the show. Before I let you go, where can people find you and ask you questions?
So the two best places are, so one is go to our website, cartwright.co.uk. You'll be able to find me through there somehow. And also LinkedIn is probably the other best place to find me.
Really cool. Perfect. Then thank you so much for your time, Sam. And also thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.